Good morning, everybody, and welcome to the final installment of our ENS Africa CPD series. Thank you to those of you who've been with us along the way, and thank you to those who are joining us today for the first time. My name is Jessica Blumenthal, and I'm a director in the Banking and Finance Department at ENS Africa, usually sitting in our Cape Town office, but today sitting in an airport, so apologies for any movement behind me. I wanted very much to be with you today to be able to introduce my colleagues Sanjay Kassan and Purusha Desai-Valodia, who will be talking to you today in this masterclass about an incredibly important topic, transformation in the financial services sector. And they'll be talking about sustainable ownership structures that can be considered. Very topical topic and one where there is a lot of content to get through. So I'm not going to take up too much of their time with this introduction. I do just want to remind you that you are able to ask them questions as we go through the presentation. You can use the Q&A block at the bottom of your screen to do so. If they don't have time to answer the question during the session, they'll reach out to you directly. And of course, you can always email them if you have any further questions that you'd like to discuss with them. Then for those of you who are here for CPD certificates, you will get them probably within about 3 days of the end of this masterclass. Please remember that you need to remain online for the duration of the class in order to be eligible for a certificate. And finally, for those of you who've not yet RSVP'd and would like to join us at our cocktail functions in Cape Town and Joburg next week, please do so. We very much would like the opportunity to meet you in person and to take our discussions further. There have been several interesting discussions in the CPD series, and if you've missed some, they will all be available by way of video library, which we'll be uploading to our website once the series is finished, and we will circulate a link to all those who've RSVP'd for any of the sessions, so you can catch up the content as we go. Throughout the series, you've met various experts from our organization, from our different offices and different practice areas. And as I've said in each introduction to each of them, they're all specialists in their own right. And they've been bringing their particular expertise to the discussions. But all of them are working together in a collaborative way to really understand the interconnectivity of these issues and to unpack from their own perspective how we can integrate ESG and various other sustainability related topics into ordinary business and into practice. And that's really the work that our practice group is doing. And we've tried to engage with that a little bit through this masterclass series. But of course, there is still much to do. So we do invite any of you who are interested in taking up any of these discussions forward to contact us. We would very much like to speak to you about it as we develop our own thinking in this regard. So without further ado from me, and because as I said, I don't want to take up any more of Sanjay and Purusha's time, I'd like to hand over to them and thank them very much and for what I'm sure will be a wonderful session. Thank you. Goodbye.
Hi, good afternoon, everybody, and thank you for taking the time to join the session. It's a privilege to talk to you about this very interesting topic and sort of how transformation fits into the ESG space. There's quite a lot to talk through on this, and we're certainly not intending to go through everything. We may need a few more sessions for many more hours to talk through sort of transformation generally in the ESG space, and particularly on the ownership structuring side. So we do intend to give you really just a snapshot in terms of our views on sustainability from a Black ownership perspective, and we're happy to then take questions towards the end through the Q&A sort of chat box. But we do hope you find this this very useful, and looking forward to engaging with you at some future point. By way of introductions, I think as Jessica said, my name is Sanjay Kassan. I head up the BE practice group at ENS Africa, and Purusha Desai-Valodia, my colleague, she works with me in the BE practice group as well. In terms of how we're going to run this, Purusha is going to give us initially just an overview of what the legislative landscape looks like from a Black economic empowerment perspective. and then I'll talk through sort of how that fits into the ESG space, what are the current market trends, and how in our view sort of we can implement Black ownership in a sustained manner and in a sustainable manner, in a way that makes the most sort of social impact for Black South Africans. So thanks again for joining, and I'll hand over Purusha to do the initial piece.
Thanks a lot, Sanjay. So as Sanjay mentioned, I'm just going to give you a little bit of a snapshot of the regulatory landscape. And I think a good starting point is really what is BEE and why it's important in terms of the South African context, generally speaking, and from a financial perspective. I think BEE in simple terms can really be described as a policy aimed at leveling in a rather fast-track manner the economic playing field that has been distorted by apartheid. It's really aimed at increasing equity and uplifting Black businesses, stakeholders, employees, communities in South Africa through various initiatives. And if one looks at the financial sector, it's really a key contributor to our economy and therefore an important component in driving transformation and creating greater inclusivity in South Africa. In terms of the regulatory framework that governs the financial sector space, you have the BEE Act, which is sort of our enabling framework, as well as codes and specific sector codes. And these codes really set out the manner in which BEE is measured. Historically, the financial sector was regulated by the Financial Sector Charter, which came into effect in January 2004. And that remained in place up until 2012, when we then saw the first financial sector code being promulgated. And then in 2017, we then welcomed the amended financial sector code. And the primary reason that the 2012 financial sector code was amended was really to harmonize it with the amended generic codes. The amended financial sector code took effect on the 1st of December 2017 with no transitional period. So what that meant is those players in this financial space had to be measured under the amended financial sector code as of 1st December 2017. The amended financial sector code does take precedence over your generic codes, but if there is, the financial sector code is silent on any matter, then we would refer to your generic codes. In terms of who does the financial sector code apply to, as you can see, it applies to a whole host of stakeholders, including the banking industry, long-term insurance, short-term insurance, etc. And then there are a few exclusions. For example, any attorney who invests funds in escrow, then the financial sector code won't apply to them. How is BEE really measured? Apologies. What are the elements of BEE? And this really determines how BEE is measured. As you can see, there are sort of 7 key elements under the financial sector code, and this is a bit different to your generic codes, which has 5 elements. The first element, and often the hardest element to really comply with, is your ownership element. And this really measures the percentage of Black ownership shareholding in your business from a voting rights perspective, an economics perspective, and a value generation perspective. And Sanjay will touch on the ownership element a little bit more shortly. Then you have your management control, and this measures the extent of participation of Black people at a board level, but also at an executive, senior, middle, and junior management levels against certain predefined targets. Your next element is skills development, And this measures the amount of money you actually then spend on training your Black employees. The next element would be enterprise and supplier development. And this measures your spend on helping Black businesses grow. And these Black businesses may or may not be part of your value chain. And then it also measures the extent to which you actually procure your supplies from other Black-owned businesses. Socioeconomic development, and often the most easy element to get full points under, really measures your spend on your sort of CSI initiatives. And then you get your empowerment financing and access to financial services, which are sort of unique elements to the financial sector. Empowerment financing, in very simplistic terms, really measures the extent to which you provide transactional financing to certain prescribed categories of people. I think there's a strong drive to provide transactional financing to Black industrials. And then sort of access to financial services measures the extent to which you can provide affordable and sustainable access to your financial services products and services to people who otherwise would not have access to them. So one can see that these two elements, access to financial services and empowerment financing, is really aimed at providing financial services to your previously unbanked and underserved Black people. And on the screen, you will see there's your little caution icons, and that's really to indicate which elements are regarded as priority elements. And what that means is that if you don't achieve the sub-minimum requirements under those elements, you will then automatically be discounted by one level. And then lastly, how is BEE really measured? It really depends on the way your entity is classified. So there's about 4 ways to classify an entity, and it's largely determined based on that entity's threshold. So if your annual turnover is less than 10 million, you will then be regarded as an EME. If it's between 10 million and 50 million, you are then regarded as a qualifying small financial institution. And then anything above that is you regarded as a large enterprise. Now, your EMEs have certain deeming levels. So if your EME is 50% Black owned, if that structure was put in place before 2017, or at least 51% Black owned, if your structure came in after 2017, then you qualify as a level 2B contributor. But if your enterprise is 100% Black owned, then you qualify as a level 1B contributor. And the same principle sort of applies to the QSFI. Bearing in mind that the Financial Sector Code does have a scorecard that your QSFI needs to comply with. And then your large enterprise has to then comply with the entire scorecard. Yeah, so that's sort of a quick snapshot of the regulatory framework. I think the last slide is really looks at how do you get your level. So in terms of measurement, BEE is measured according to a point system, and each company then earns a certain number of points depending on how they fare on each of the elements. And then if you achieve greater than 100 points, you will then be regarded as a level 1, which is your sort of best level rating. And then if you have anything less than 55 points, then you're regarded as a level 8, which is regarded as the worst level rating. Thank you so much. I will now hand over to Sanjay, which will talk about the ownership in greater detail, as well as the key market trends.
Thank you, Rusha. So, to talk about ownership, as I mentioned earlier in the introduction, it's a very, very broad topic, and in some instances a difficult topic. in order to sort of find sort of the most sustainable ways to achieve Black ownership in sort of in organizations operating in the South African market. As Purusha indicated, one of the elements of the BE scorecard is ownership. And there are a host of other elements that companies need to focus on, in order to sort of embrace their transformation objectives. And I think all of those require separate discussions and have sort of a fair amount of complexity attached to them. I'm going to talk sort of just on the ownership element in this session. So I think all of you, or most of you, would have participated in a host of ESG sessions over the last sort of week or so from various of our colleagues. So I think from a sort of overall objective sort of perspective, or the purpose of ESG, I'm assuming that sort of I think everyone sort of understands what that means. But sort of just to sort of recap, and where it becomes important from a transformation perspective, is that ESG is not sort of just, it's more than tick boxing. It's sort of ticking boxes, right? It's gone way beyond that. From a BE perspective, for many years, empowerment was just really seen as sort of a compliance requirement. Companies would get rated from a BE perspective and simply just get a scorecard, really just ticking the boxes, getting a level rating. And that was really the extent of it. And in many instances today, that still is the extent of companies' sort of contributions towards transformation and empowerment in the country. But with ESG, with the sort of the global movement towards ensuring greater impact, particularly from a social perspective, and that's where sort of the BE fits in, it's becoming far more important that that transformation is about making a real difference. Right, it's that we have to move beyond the sort of ticking the boxes approach. Really what we need to ensure, and how do we drive this through transformation in South Africa in particular, is that we have to create sustained outcomes that drive value, fuel growth, and strengthens our societies, right? And I think that's where it really becomes important to consider ESG and transformation. And there's often been questions in the market, but are these two aligned, right? What does it mean? How does ESG fit in with transformation? And it's very much aligned. If we look at the key principles of ESG, and although the ESG has many more key principles, but some of the key principles of ESG and the key principles of transformation in terms of our legislation, and really that's those aligned to the elements that Purusha spoke about, they actually are very much aligned. So in terms of our legislation that we have in South Africa, we've actually been quite a forerunner, right, in the global market when it comes to transforming societies, and how we actually sort of have put in legislative mechanisms in place to actually create and bring about social change in the country. And I think that's where South Africa is sort of quite unique in that regard. Right? I think many global or many other countries, international countries, don't have these mechanisms in place in order to ensure that from public sector to private sector, how do you actually make a meaningful difference to the societies which live in those countries, and this is where sort of BE is quite key. So when questions are asked, well, that we're not sure how this all fits together, what do we do with BE? We've got our ESG policies. How does this all fit together? It very much fits together. It's very much aligned. And I think BE is a very important tool and mechanism for companies to use to actually achieve the social change, right? Pursuant to your ESG objectives. So when we're talking about sort of the social impact of transformation, I think as Barusha mentioned, sort of, the overall objectives of BEE, and put aside the technical rules, the scorecards, the elements, as I said earlier, the ticking the boxes, put all of that aside for a moment, right? What is transformation intending to achieve? What is the purpose of it? We can debate in a separate session whether the legislation is working. Is everything working? Have we made mistakes along the way? Have we made it too complex in certain areas? And I think there may be some valid arguments to all of those things, right? But if we put all of that aside, it's really, how do we change society, right? Particularly given the past that South Africa's had. How do we actually change society? How do we get to a more equal place? How do we get a significant portion of the South African society into the economic sort of world, or the economic space where they were excluded for many decades, right? And how do we sort of develop people? How do we ensure equal participation, at all levels within organizations? And that's key from a transformation perspective, and very much aligned with what ESG objectives are from a social impact angle. So when we look at ownership, and I think we've had various phases of Black ownership in the country since BE sort of came out. The BE legislation came out in 2004. The first set of codes came out in 2007, and then we had the initial financial sector chart, etc., as Barusha mentioned, how this all developed. And we had various phases, and it started sort of almost with just key individuals, and call it high-profile people that ended up being local Black shareholders of companies, and that's what sort of companies use in order to ensure that they are contributing to increasing the levels of Black ownership in the country. But that sort of changed sort of over time, because the view taken, and even though at that point ESG wasn't really a thing in those years, but many companies, including government, said, look, well, is that really what we want to achieve? Sort of a handful of entrepreneurs, sort of owning or sort of shareholding as the local Black shareholders in significant businesses in the country. Are we actually achieving what we set out to achieve as broad-based empowerment, right? Are we actually empowering, developing sort of the broader population in the country? And this is where we see market trends over the years, and we'll run through very briefly some precedent transactions. So recent precedent transactions in terms of Black ownership structures that companies have put in place, which at the very least on the face of it seem to be more sustainable, more impactful, it's really aimed at having a much broader impact on society, as opposed to just local minority shareholders or shareholding held in sort of in the hands of a few individuals. So just to run through what ownership is in terms of the legislation, it's really a bundle of rights, right? And ownership is measured from a BE scorecard perspective, sort of with three key components, right? One is voting rights, so exercisable voting rights in the hands of Black people, whether it's directly or indirectly through various structures, which I'll talk to in a moment. So voting rights is key. Economic interest is key as well, and this is the economic benefit that Black shareholders receive by virtue of holding their shares. So think of this in the form of dividends that flow through the holding of those shares, or any sort of capital value attaching to those shares ultimately being received by the Black people who hold those shares. And then also net value, which is a very key component, and that is to ensure that there's actually value creation in the hands of Black shareholders. In other words, ensuring that sort of shareholding of Black shareholders are not indebted or encumbered forever or for very long periods of time, not resulting in actual value creation in the hands of Black shareholders. One of the criticisms of call it the first wave of BEE, where ownership structures were so heavily indebted that it was really the financiers of those structures that benefited economically from them, as opposed to actual Black people who held those shares, contributed to the Black ownership credentials of companies, and ought to have in fact received sort of the value, or a certain percentage of the value of those shares. So what are the general principles of ownership, as touched on earlier? And we have to view transformation, we have to view BE from a substance over form perspective. And it goes to what I said earlier about, we have to look at what the objectives of BE is, what the objectives of transformation is, put aside the ticking the boxes, right? We have to understand what it is. And it's not just in order to comply and to get a level rating, but I think it needs to permeate throughout organizations. What is transformation? Do we live transformation in everything that we do? Because it's critical in the South African market and the South African economy to not just to pay lip service to transformation, but actually achieve a meaningful and sustainable change, right? And this is where corporates, this is where we can make a difference, right? In terms of the legislative mechanisms that we have, as mentioned earlier, as opposed to other countries which don't have these mechanisms. If you look at if you look at America, for example, and I've had a few discussions with some sort of media houses in America about that they want to talk about, well, how does BE work? What is this? Right. So if you look at the Black Lives Matter, all of those issues that the US is currently having, they're starting to question why corporate America, right, is not playing a bigger role in addressing the challenges of Black people in that country. And they're looking to countries like ours to say, look, well, you have these rules. What are they? How do they work? Right. And is it something that other countries need to be looking at in order to have legal mechanisms for, at the very least, the private sector to step in and actually assist in ensuring sustainability with sort of marginalized communities in other countries. So really, substance is the key here. And I'm not going to go through all of this. Parusha mentioned some of this. You get points for participation by Black people. You get additional points for participation of different categories of Black people in your ownership structure. And that's all, again, designed to ensure that we just don't focus on a few individuals, right? It encourages, incentivizes companies to, when you are looking at Black ownership structures, look at a broader base of beneficiaries to participate and benefit from your ownership structures. To go through, as I said earlier, Black people can hold ownership and be recognized as Black shareholders, either directly if individuals hold shares in organizations, but they don't need to. They can hold indirectly, right? They can hold indirectly through companies, through trusts, through other vehicles, through a whole sort of tiered structure if required. But ultimately, when you measure Black ownership, you do it as a default on a flow-through basis until you actually reach the individual Black shareholder that you're recognizing for your Black ownership purposes. There are some sort of call it sort of deemed provisions, for want of a better phrase, in the BE legislation to enhance the Black ownership of certain of your shareholders, and what we call the modified flow-through principle. That if in your ownership structure you have a shareholder that's at least 51% Black owned, then you can deem that shareholder to be 100% Black owned, and you're permitted to do that once in your ownership structure. So a bit of a deeming provision, a bit of a benefit for companies to enhance their BE ownership through ensuring that they have, at the very least, a BE shareholder that's majority Black owned and controlled. And the beneficiary base, as I sort of mentioned a minute ago, I think when we are looking at what's a sustainable Black ownership structure, what is, who do we want to participate as owners in companies? Yes, it has to be Black people. But is it just a handful? Is it one? Is it a very high profile person? Is it, what's been done in the past? Is it a politically influential person as your Black shareholder? And that, again, was sort of more the thinking in the first wave of empowerment. But now, as we're moving along, the world's moved on. There are sort of different sort of strategies, different objectives, like ESG, that we need to actually have a bigger impact, a more meaningful impact than that. So when we're looking at ownership structures, look broader, right? We need to see that we want to have Black women participating more in these in ownership structures, because up until today, I think there are still, Black women are still not participating at a sufficiently sort of high level in ownership structures, in management structures in organizations. And I think that's where there needs to be a lot more focus in having sort of Black women involved, as well as specified groups. So the legislation does encourage this. It encourages companies to have women participation so that you can get additional points. It encourages and incentivizes organizations to have sort of what we call designated groups, participating in ownership structures. And these are unemployed people, youth, people with disabilities, people living in rural areas, military veterans. And you can get additional points under your scorecard by having these designated groups participating in your ownership structures. And also Black new entrants, to ensure that actually let's get more people involved. So let's not just have the same people that are participating in ownership structures, across all industries. So Black new entrants are, again, encouraging, incentivize companies for having sort of Black shareholders that have not participated in other Black ownership transactions. Above a certain threshold. So when we are looking at what is sustainable from an ownership perspective, look across the board, right? And have a spectrum of Black shareholders that participate in your ownership structure. Right? One is more sustainable. It's something that endures for a much longer period of time. It has a much broader and much more meaningful impact on society than one or a handful of individuals. So if you look at forms of BE ownership, I mean, really, we're looking at sort of equity options and what we call non-equity options. Right? So equity options this is sort of what you would regard as the more traditional sort of Black ownership, where you have a Black partner in whatever shape or form that takes, that actually holds equity in your organization, and these partners could be strategic individuals or strategic investor. It could be an employee share ownership program, an ESOP structure which operates for the benefit of Black employees of an organization. That structure counts towards Black ownership, and forms forms part of what I mentioned on the previous slide. Forms part of this designated groups, where you get additional points for having a broader base of shareholder participating in your ownership structure, or you could get sort of broad-based ownership schemes. And these are sort of, call it, your more philanthropic type structures. So these are typically structured as trusts that operate for the benefit of communities. They run education programs, they run community projects. They sort of a host of sort of poverty uplifting programs that these schemes can achieve for the benefit of Black people, provided that you comply with certain of the qualification rules in the legislation. These entities do count towards your Black ownership. And then non-profit companies can also count towards Black ownership. So you can have non-profit companies, so typically your PBO organizations out there that do projects, programs, etc., for the benefit of Black people, and provided that you comply with certain qualification requirements there, that can also count towards your Black ownership. So again, when you're looking at equity options, look at a broader spectrum, right? I think this is becoming more more important, right? What's going to be more meaningful? What's going to be more sustainable? What's going to be more impactful from a transformation and ESG perspective? And then we also get non-equity options, and sort of we've just called it that. The legislation doesn't call it non-equity options, but we have equity equivalent investment programs, and these are programs that are available for multinationals that operate in the country that are unable, due to a global policy of not having local shareholders in South Africa. And there's a mechanism through which they could be exempted from having local shareholders, and put in place a equity equivalent program, which is really committing a certain spend towards a certain approved program for the benefit and upliftment of Black people. And it's something that needs to be approved by the government, and if so, it then could count towards Black ownership. Then sale of assets. One of the sort of provisions of the legislation, it encourages companies to, when they're looking at disposing of sustainable, viable businesses, that they sell these businesses to empowered buyers, right? And provided that you satisfy certain of the requirements of the legislation, and if you sell what they call an identifiable business, then the seller of that business can claim some ownership points under its scorecard for the sale of that business. So it achieves two things. One, it incentivizes sellers, and it benefits sellers by claiming ownership credentials, and it actually then drives sort of more sort of the growth of more Black-owned businesses, right? Black owners and entrepreneurs in the country. Then we have options, and there are certain provisions in the legislation that if you grant an option to a Black shareholder or a Black person to acquire equity, and again, if you satisfy certain of the qualifying criteria, then by virtue of giving that option, the person giving the option can count, or the person holding the option rather, right, can actually count as the Black, or be recognized as the Black shareholder, even though it only holds an option and not the actual shares forming the subject matter of that option. And then we have unincorporated joint ventures as well, and I think there are some rules in the codes in terms of how you actually measure an unincorporated JV for Black ownership purposes. So when we look at market trends, I think, again, to tie back to what we were talking about earlier, what are companies doing now to make more of a meaningful impact, a broader impact, and a more sustainable impact? So what seems to be the trend, and if you look at precedent transactions, is that there certainly seems to be sort of a move away from having only third-party minority investors, right? And I think one of the reasons for that, one, does actually tie into the sustainability objectives, the impactful objectives, all of those things that we've just mentioned. But there are other commercial reasons why we think, right, there's a move away from these. Often objectives of the companies and the investors are not aligned. We saw a lot of that come up during sort of the turbulent years we've had over the last, since COVID, and all of the changes that that happened, and sort of the impact that these sort of economic challenges that they've had on companies has resulted in a lot of misalignment between minority investors and majority investors in terms of long-term sustainability of businesses. There's a pressure on declaring profits. There's always a point in time where minority investors want to realize their investments, which then puts a question mark on the sustainability of these structures. There's sort of involvement in operations, which a lot of multinationals, these things are starting to become challenging in some instances. And there's limited sort of control over the investors' shareholding in the company. So there's certainly been a trend in the market to sort of move to what we call here internally created structures, right? So these are more the broader based structures. And these are the structures that benefit Black communities and Black staff. And, the empowering of communities, empowering of staff are very much aligned with the principles of ESG. More staff involvement in ownership structures. There's lots of benefits to that, ensuring alignment, incentivization, and sort of all of those benefits from having staff participating in ownership of companies and Black communities. That ties very clearly into the social impact, right? How do companies actually benefit to sort of communities in South Africa? How do they uplift communities? And how can they actually then assist or play a meaningful role in having Black people in, sort of developed, skilled, and brought into the economy, brought into the job markets. And these are sort of what companies, in our experience, and the ones that we've done for companies, seems to be far more sort of front and center as opposed to any other sort of type of ownership structure. I think, as I mentioned, so broad-based ownership schemes. I mean, what are the other benefits of these, right? One, they're evergreen. It ties into sort of long-term sustainability, one, for companies in order to ensure that they have sustained BEE ownership for their benefit, granted, but also sort of the evergreen benefit for the communities or the Black groups which those broad-based ownership schemes are intended to benefit, right? So it's not something that's a 3-year deal, a 5-year deal, and then those deals come to an end, and then we need to think of what else do we need to do? Has it in fact made the sort of a meaningful impact? So that's certainly a very key criteria, sort of for many companies that we speak to regarding creating sustainable ownership structures. It contributes to the transformation, the overall transformation objectives and CSR objectives of organizations. And I think, sorry, I was meant to put in there ESG, but it ties into that. So they are very much aligned. As mentioned, meaningful, sustainable impact, and it enables the company to be involved, right? So it's not, again, one of the sort of criticisms of BEE, is it just ticking boxes? Is it writing a check, giving it to someone else, and then you go do what you want to with it, but then the companies step out, or they're not really involved in the operations or involved in the sort of actually the benefits, right, that these schemes sort of provide. And this enables companies to actually play a larger role, right? Again, as I mentioned up front, what is ESG? It's making a more meaningful impact. Actually, this needs to be, these objectives need to be permeating through organizations at every level. It needs to be on top of mind, with everyone in the organization. And this actually helps that, because companies actually are involved. They're actually seeing the difference on the ground. From an employee share ownership perspective, there is certainly a very, very strong preference to have employee participation in ownership structures. So, and I think this is not only in the private sector, but also in the public sector, right? There's a strong drive from the government to have more employee participation, and very much sort of aligned with one of the key principles of ESG is employee involvement, employee development in businesses. So this ties to and is aligned to sort of quite a number of objectives, and I think we've seen this play out in the trend in the market to have employee schemes. So again, why do we see this? It serves and it benefits the company because it's an incentive and retention mechanism. It addresses sort of the BEE objectives by sort of enabling Black employees to participate as owners of productive assets in South Africa. It provides evergreen ownership because these schemes can actually be put in place sort of almost indefinitely, and these schemes then benefit employees, existing employees, and future employees that join business over time. So again, ties into the sustainability argument, one for the company, and two for employees, right? So I think, if employees are involved in businesses for these years or decades, they're benefiting from the growth of the business through economic benefits by participating in an employee share ownership scheme. Again, contributes to the company's overall BE objectives, overall ESG objectives, and those are aligned. And yes, this does make a meaningful, if they're done properly, it does make a sort of a very meaningful and sustainable impact on the lives of Black employees, and ensures alignment of interests between sort of employees and those of the company, shareholders, management, etc. So if we look at these trends, and we just pulled out sort of just a handful of recent ownership structures that have been implemented in the South African market, if you look at them, sort of all of them are include employees. Right, so staff scheme is really front and center in terms of having having a sustainable Black ownership structure, and then also the broad-based ownership scheme. So the community CSI type schemes that these companies have been put in place. Old Mutual, that one additional component where they actually had Black public participating. Some other companies did this over the years. I think MTN did it. Sasol did it as well, where we had Black people were able to sort of acquire shares through sort of a public offer process. But that was a very small percentage of it. But still, overall, right, this is where we're seeing the trends in the market in terms of how to implement sort of something that's sustainable and meaningful and impactful. I just wanted to touch on, as I mentioned earlier, with the equity equivalent programs, for multinationals. Not too sure whether we have many in place or many participating in this call, but just to talk through sort of what that actually means. So we've got about 8 or 9, maybe 10 equity equivalent programs in place in South Africa. And as I mentioned earlier, these programs are available to multinationals who are unable through global policies to have local shareholders in South Africa. And these, in terms of these schemes, these multinationals can be exempted from having local shareholders by the government, the Department of Trade, Industry and Competition, provided that then they put in place a program which is aimed at development of Black people. And these programs are intended and do have a very sort of lasting, meaningful impact on the development and upliftment of Black people in South Africa. So these are available to multinationals. The value of these programs are based on either the value of the South African operations of the multinational, that's pegged at a 25% value, or alternatively, you can base it on 4% of the total revenue of the South African operations over a period of time. Sort of some downsides to this, to an EIP. It does take quite a long time to get these approved by the government. In our experience with the few that we've done, it could take up to 2 years to get this approved and ultimately then implemented. And then, depending on how much you spend on the program, if you're spending 100 million Rand or more, you can get recognition for up to 10 years. So it's not sort of evergreen. At some point, the program then does come to an end. And then you need to sort of either put in place another program or do something else from a Black ownership perspective. So some EIPs in the market, I think the most recent one was JP Morgan implemented one in South Africa. but also Amazon's done one, Samsung's done one, Caterpillar has done an equity equivalent as well. So there's a number of really large multinationals that have done this in the South African market on the basis that they were unable to actually have local shareholding. So so I think we've spoken about this. I'm not going to go through all of that in detail. I just wanted to touch on the sale of assets as well, which we see sort of fairly often, and particularly with some of our banking clients, they do sort of claim sort of Black ownership recognition through the sale of assets, as touched on earlier. I think the key in terms of the legislation, or the mechanism in terms of the legislation, is to encourage companies who are selling businesses to sell them to empowered buyers, and if they do so, they are then able to claim Black ownership recognition for that sale. And at the same time, they're sort of contributing to the development of Black entrepreneurs, right, or Black business owners, because the buyers of these businesses will continue these businesses and hopefully grow them. I think what's key here is that there must be sort of a sale of what the legislation calls a separately identifiable related business. And the objective of this piece in the legislation is that it must sort of result in a viable and a sustainable business opportunity in the hands of Black people, right, as buyers of the business. And I think this is fairly commonly used in our experience, and something that can contribute, right, to the upliftment of society, to the sustainability of Black people, the creation of employment, etc. So I think it is something that's quite key in considering improving Black ownership credentials of organizations. So I think that was our talk. We do have a few minutes left, and I think maybe that's the time just to have a look at to see whether there are any questions. I just want to go through the chats. If you do have any questions, please put it in the chat box for us, and we'll try to answer them. If we are not able to answer the questions, or if it's a very complex question or a difficult one, we will certainly come back to you. We do have all of your details, and we will come back to you with those answers. So I think there was a question here on how does ownership by pension funds count in BE scenarios. So pension funds, so the BE legislation recognizes that ownership can come through from mandated investments, right? So companies that do have institutional shareholders, those are called sort of what we call mandated investments, and those institutional shareholders then could have a whole host of pension funds, and I may really not know how all of that works on top there, but that does count for BE ownership purposes, provided that it's very difficult from a BE verification perspective for the company or the company's BE rating agency to go up and look at the information of each individual policyholder, right, who's Black, and look at ID documents and all of those things. So that's very difficult to do, and I think doesn't really happen. So what the legislation provides for is for companies that have these shareholders to appoint a competent person, and for the competent person to actually then prepare a report on the Black ownership that flows through from mandated investments. So there are a number of competent persons in the country that do these things, and I may not be able to talk to precisely what their procedures are, but they are able, through their procedures, to go on an estimation basis, and sometimes on a sampling basis, to estimate what level of Black ownership flows through from, or should be recognized from, mandated investments. So they are, yes, they do count for BEE ownership, and they are able to be verified, but verified based on estimates prepared by a competent person, right? And the competent person prepares a competent person's report, and that report is given to the BEE rating agencies, and then the rating agencies use the data from that report to include into the Black ownership credentials of a company. I think there's another question. I think there was just a request for the slides to be presented. Yeah, absolutely. We will circulate the slides to the group. I will certainly ask our team to do that. Okay, let's see. Is there any? Let's see if there are any other questions. Yeah, there doesn't seem to be any other questions, but I certainly hope that was useful. It's a really broad topic. Bruce and I, we do BE day in and day out, and we can talk through this for days on every sort of aspect of it. But hopefully this was a sort of short and useful presentation to you. Please do reach out to us if you have any further questions. We actually do like giving these talks to many people as often as we can. But if there's anything needed, or if you need, please do reach out to us. We will certainly reach out to you guys as well, to the extent that we can provide any assistance will be helpful. And we do hope that we see all, or at least some of you at the cocktail functions that are being set up for next week. So yeah, so if there's nothing else, I think just for me to say thank you very much, and hope you have a lovely day further.
Thank you, Sanjay and Purusha, for that excellent session and for a very thought-provoking one. I'm sure that there are many people who will have more questions and who will need to get in touch with you. Thank you again, everybody, for being with us through this series and for your attention. This is a wrap. This is the final series. As I said, you will be able to access the content via our website, and you'll get a link when it's available. We really do appreciate your attention, and also, again, thank you to all the presenters from all the different offices and practice areas who have worked together to present this series. I'm very grateful, and we are very proud of being able to collaborate in that way. Thank you, everybody, and hope to see some of you next week. Goodbye.